What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did see another day of low volume selling. Is this all just going to be one giant bear trap? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, first up we're going to do something a little bit different and we're going to start looking at this chart by Sentiment Trader. You can follow them on Twitter and they have great charts that can help you in your trading. Now this chart is showing you inverse ETF volume, so essentially it's trying to show you how many traders are trying to short this market by using the volume on inverse ETFs. You can see this is a contrarian indication, and typically speaking when there's high volume in inverse ETFs, the market typically rallies after those moments. So right now you can look at the inverse ETF volume and see that it's actually higher than where we were at in the March 2020 crash. Obviously we kept going lower during that crash, but typically speaking this is a great contrarian indication that you're on the wrong side of the trade. So if you're still extremely bearish at these levels or you still think the market has a lot more downside, hopefully this helps you understand that you're basically in the crowded trade and you're in the same exact boat as almost every other retail trader and their mother. If you're comfortable being with the side of the trade that everybody is in, then obviously continue to try to short this market. But if you're a contrarian and you think we're potentially bottoming and getting ready for a next leg higher, this chart is going to tell you that now is the best time to take that trade and start looking at potential long side. Now, a very similar study by the same exact group at Sentiment Trader is also saying that SPY is closing in the bottom 25% of its intraday range for the fourth day in a row. That's tied for the second longest streak in its history. In 14 of the last 16 events of this streak, SPY bounced over the next week. So on the side of the odds that you want to be on the right side of the trade, 14 of the last 16 times this occurred, SPY bounced over the next week. So that goes hand in hand with the other study that there's just way too much bearish sentiment and way too many people trying to short this market in the current conditions. So I don't even have to ask if the majority of you out there are bearish because I can already tell from the data that a lot of you are still trying to short this market. So yes, I still do think this is a potential bear trap and you really need to be cautious at these levels getting overly bearish. So jumping back over to the S&P 500, we can see that we're at a very critical pivot of support, which is where we bounce back on 921, and it's also our pivot support trend line right around SPY levels of 434. So SPY was down about 0.25% today, and it was on slightly higher volume than yesterday, but overall this is still relatively low volume for a red day. Remember, typically you want to trust selling volume when it's on higher volume, because the selling usually takes the elevator down. This could still be a bear trap as I showed you in the introduction. Now remember, we're looking at weekly charts and we do want to pay attention to where SPY closes the week, and that level on SPY is just above 437. If SPY closes below 437 at the end of the day on Friday, we will lose the macro level bull trend and this market could be at jeopardy of rolling over and dying, which means SPY could be coming all the way back down to about 410 or lower. So watch that critical close for the end of the week. Otherwise, we don't know how to read this chart until we get the read at the end of the day on Friday. Now remember, the other thing we're watching is the hourly chart on SPY, and we're waiting to see if SPY can form another higher low. We already know we're forming higher highs and higher lows on the hourly chart, but the jury is still out on whether or not this is going to be a higher low or we're going to come back down here and blast right through the previous higher low at 429. So I know this isn't the answer you want to hear because we don't know where SPY is going to find the next higher low or potentially break down and go to another lower low, but anything above SPY levels of 429 is still a higher low. This could be a very painful trend reversal and it's a lot of damage repair for the bulls coming out of a daily downtrend to try to reverse the downward trend. So right now you can see this is still a very corrective looking move with a nice three-wave structure, and it does still look like a three-wave counter trend move. We had the really strong impulse higher and now we're getting the very weak low volume three-wave counter trend, which tells us we could be getting ready for another impulse higher, and that could easily take us higher to close the gap at 442 and possibly even blast through the gap above and continue to run higher. So as long as SPY is forming a higher low, higher high situation on the 1 hour chart, that is the most early indication that we are seeing a trend reversal. Remember, we're going to see a trend reversal on the 1 hour chart before we ever see a trend reversal on the daily chart. So the easiest way to go long on this market is you're basically going long on SPY as long as it's above 429 because that's our higher low condition. We still have the gap above that hasn't filled, and we do know that gaps typically get filled. It's just a matter of when and not a matter of if. So the hourly chart is still looking bullish, and we still do have that counter trend move that we're paying attention to. And that counter trend move could have gone to a close at today's support level for all we're aware of. That will go hand in hand with what I showed you in the introduction, that there's just way too many people trying to short this market, expecting us to break down and go through another stock market crash. I don't think the market's going to crash, and I do think it's possible we did see the market bottom on October 4th, and that was the low that we saw before we're going to another brand new all-time high. So we can't rule that out as a possibility as long as we see a potential trend reversal on the 1 hour chart. Now, if we do start breaking down below SPY 433, you will want to watch that support level at 429. And below 429, we're definitely going into a deeper stock market correction with critical support levels at 425, 419, and the gap close at 411. So those are your critical support levels to pay attention to. Otherwise, you still need to take the price action day by day, and you need to stay objective. If you're being objective, there's no way you can look at the daily chart and see anything other than a downtrend. So yes, I realize we are in a downtrend, but at some point you have to be flexible and you have to understand there is the possibility the trend is reversing. So if we bounce off this support and we start to break out, the most critical resistance levels to pay attention to will be 436 and 439. If we start closing back above 439 and reclaiming the 50 EMA as support, that will be your bullish signal that we're going back on the bull, and we will be breaking out back above our resistance trend line, which means we're starting to break the downtrend on the daily chart. Remember, this is going to happen over short periods of time, and you're not going to see a quick trend reversal on the daily chart. You're going to see it on the hourly chart first. So watch that critical resistance at 436 and 439, and don't forget about the gap close at 442, because that could be another very critical resistance area. Jumping over to the NASDAQ 100 triple Qs, we were down 0.35% today, and we are in that no man's land between the 360 resistance and the 354 support. Now, we did see intraday, we did test that resistance at 360, and we did get rejected from that level, closing near the low of the day. So we are selling off on slightly higher volume than yesterday, but just like with SPY, we're still selling off on relatively low volume. So we're only down 0.35%, and we still don't see that elevator down high volume selling that we're accustomed to on a typical sell-off in the stock market. Now, jumping over to the weekly chart on the triple Qs, the number to close above for the triple Qs on the weekly chart will be just above 362. So 362 is the key level we want to see closing above by the end of the day on Friday if we're not going to lose the bull trend. If we see the triple Qs closing the week below 362, we're very likely going into that deeper stock market correction, and we could see the triple Qs coming all the way back down to the 330s. So jumping back over to the daily chart, your most critical support level by far will be 354. Below 354, we still do have a support trend line right around 353, but more than likely we're going to break down and come back down for that next leg lower at 347 or 342. So watch that very critical support level at 354, and as long as we're above that level, we are still very likely putting in another higher low. Remember, the triple Qs have a gap way up here at 367.7, and those gaps will get filled. It's not a matter of if, it's just a matter of when. Now on the daily chart, we still do have the full bear trend, so you need to be cautious to the downside, so watch that key support level. To the upside, we have key resistance at 360 and our 365 resistance level, and above 363, we start looking like we're getting a bullish breakout look because we'll start breaking out above our resistance downtrend. Now switching over to the triple Qs 1 hour chart, it's the same exact story as SPY, and we're trying to see if we can put in another higher low. So right around 357, we are starting to build somewhat of a base. And if we can bounce off of this level, we could start impulsing higher and we could close that gap above and possibly continue to run even higher. Remember, we're impulsing higher and we're seeing a 3-wave corrective move, which is a counter trend move, which means we could be going back on the bull and seeing another impulsive wave higher yet again. So look for this potential support level, which is going to be another higher low right around 357 to 356. Which is still another higher low above our previous low at 354. So don't rule out the possibility on the 1 hour chart that we are seeing a trend reversal on both the triple Qs and SPY. Also, don't forget on the daily chart, we did have this nice ABC structure look, and it's the same exact look that we saw in Bitcoin before Bitcoin started to impulse higher as well. You know where Bitcoin's currently at, so the rest is history. We could be seeing the triple Qs doing the very same thing. Jumping over to the Dow Jones, we were down 0.35% today, and we did fully close the gap below, which was right around 344. We see the Dow Jones also close back below the 20 simple moving average, So even though the Dow Jones does not have the full bear trend anymore on the daily chart, the price action is below all the moving averages. So the key support level on the Dow Jones is at 341.8 and 339. Below 339, look for support right around 336.76 and the gap close at 332. If we can see the Dow Jones getting back above that 50 EMA, which is just right around 347, we could start to see again another higher low situation and then again another bullish breakout. If the Dow Jones can get back above key resistance at 348, we could see the Dow Jones breaking out and getting ready to reattempt to see if we're going back to new all-time highs. We'll still have resistance at 351 and 355 if we do get that breakout above 348. We were very close to getting that breakout before, and now we're starting to see a little bit of a cool down, but you do need to watch this key support level right around 339 because below that, we could see another deeper stock market correction look. On the Russell 2000, we were up 0.55% today, and at one point, the Russell 2000 was back above the 50 EMA, but we did find resistance right around 222 and closed back below the 50 EMA yet again. Remember, the Russell 2000 doesn't have a bear trend or a bull trend, and it's actually consolidating and wedging into a triangle, so we're going to know very soon which direction the Russell 2000 is going to break out. We can get a breakout above 227, that will be very bullish, and a breakdown below about 215 will be very bearish. So watch 215 as a critical support level for the bears to try to break, and 227 as a critical resistance for the bulls to try to break. Everything in between is just range-bound trading with resistance at 222 and 224 and support right around 220 and 219. If we break below any of those range-bound trades, look for those key resistance or support levels, and then we will know very soon which direction the Russell 2000 is going to break out. On the ARKK ETF, we were very green today, going up 1.36% and the price action closing back above the 5 EMA. Remember, ARKK is in a confirmed double top look and we do have the full bear trend with the price target down here at 102. We had a very clear double top look around 125.6 and we did break the neckline, so the confirmed downside move is still down here at 102 as long as ARKK is trading below 115.5. If we can break back above the neckline and break out above 115, the double top is invalidated and we no longer have to go to 102. So by far the most critical resistance levels will be right around 113 and 115.5 with critical support at 109, 106 and our price target at 102. Jumping over to the VIX, we were down 0.75% today, so we did see a bullish divergence. We saw the VIX going lower the same day we see the SPY going lower. And typically speaking, if the S&P 500 is going lower, you want to see the VIX going higher. So yes, this is still a bullish development with the VIX still below 20 and getting rejected at that 20 simple moving average and closing lower for the day. Remember, the full bull breakout will be the VIX closing back below 18.2, so there's no way we can look at the VIX and go full bull just yet. The good news for the bulls is that the VIX is not closing back above 20, but we are still above this 50 EMA, and this is the support trendline breakout look ever since we did break out of the resistance. So the VIX above 20, look for a deeper stock market correction, and the VIX below 18.2, look for another bull cycle as we get back on the bull and continue to go higher. Anything in between is just a chop zone, so while the VIX is chopping between 20 and 18.2, expect it to remain a very volatile and choppy market. On Bitcoin, we're currently down 2.8%, but we still see Bitcoin in the full bull trend with the price action back above all the moving averages. Remember, my price target is just below 59,000, and if we break out above this level, we are very likely going to a brand new all-time high. I have price targets at 67,000 and 75,000 if we can break out above 59,000. The most critical support levels to watch on Bitcoin will be 52,700, 51,000, and 48,000, but as long as Bitcoin is above 45,000, I think you can stay on the bull. Remember, you never know exactly how high Bitcoin is going to go, so as long as Bitcoin is in a bull trend, I think you're much better off just holding it and going on for the wild ride. On Amazon stock, we were flat on the day, only going up 0.03%, but we still see the price action below all the moving averages, and we still do have the full bear trend. So the one thing on Amazon you need to watch for is a break and close back above 33.11, and then we could see Amazon going back on the bull, and we could start closing the gaps above at 34.52 and 35.80. As long as Amazon is below 33.11, it's very likely we're going down for that next leg lower, and we're either going to get a double bottom look off of 31.85, or we're going down for that next leg lower at the key support level at 31.36. So look for resistance at 33.11, and if we break above that level, you can get a lot more bullish, and then look for Amazon to try to break back above the 50 EMA, which is right around 33.60. Below 33.11, look out below because we could be coming back down to support. On Tesla stock, we are still looking bullish with Tesla going up 1.74% today on increasing volume, and we did see Tesla breaking and closing above that resistance level at 800, so that does mean Tesla is well on its way to the next price target at 825. If Tesla can break out above 825, we're very likely retesting the previous all-time highs and potentially breaking out to a brand new all-time high. Tesla now has support at 800, 774, 765, and by far the most critical support level is still down here at 732. We also have our 50 EMA breakout level of support right around 743, so watch that level as well. If Tesla were to close below 732, I think we could see a full-blown correction in Tesla stock, but right now it has the full bull trend with full bull price action, so there's no reason to believe that Tesla is not going any higher. On Apple stock, we were down 0.91% today, and we did break back below that support level at 142, which means we could be seeing Apple coming back down to 139 or to close the gap at 137. Remember that Apple is a market-moving stock, so if Apple does break down below 139 and close the gap at 137 and it finds strong support there, that could also signal the bottom in the rest of the market. If we see Apple breaking down below 137, look out below because we're going much lower, and that would likely go hand in hand with a deeper stock market correction. However, if we see Apple breaking back out above 145, it could be going back on the bull, and that could carry the rest of the stock market back into a bull market as well. So Apple is going to be very critical to watch, so look for resistance at 142 and 145 and support at 139 and 137. Remember, Apple is in a full bear trend and the price action is below all the moving averages, so on the daily trend, we still do have a lot of downward pressure. On the financial sector, we were down 0.31% today, but we still see bullish price action with the full bull trend in the financials. The industrial sector was down 0.33% today, and we still see the industrials price action closing below all the moving averages, and we are starting to develop some bearish momentum yet again. The industrials need to break back above the 50 EMA to reverse the bearish trending. The healthcare sector was down 0.48% today, and we do see the healthcare sector looking like it could be finding support at that previous low. We have the full bear trend, so it could be going much lower. Otherwise, look for a bounce from here and attempt to break back above the 50 EMA to reverse the downward trend. The energy sector is still looking bullish, going up 0.09% today with the price action back above all the moving averages yet again, and we still do have the very strong bull trend. So jumping back over the S&P 500, this is going to be a very critical week for the stock market, and we should know which direction the market is going to go by Friday's close. We're either going to close below the weekly 20 simple moving average and see the stock market roll over and die, or we're going to see a very bullish rally in the second half of the week and close back above those key support levels. So stay objective and remember on the daily chart we are in a downtrend, but we are starting to see some bullish developments on the 1 hour chart and we are potentially seeing a trend shift. Remember, you're going to see the trend shift on the 1 hour chart first, and then eventually it'll work its way into the daily chart. And on the weekly chart, you do know your key support levels that we need to close above at the end of the day on Friday. So use your multiple time frames to crush this market, and don't forget about what I showed you in the introduction of this video. There is a lot of bearish sentiment, and usually the majority will be wrong, and right now the majority is still very bearish. If you're going to be a contrarian, now is the best time to start considering the fact that the market already bottomed and we're going back on the bull, and we're about to see a bullish breakout in the next coming week. Always stay objective and always let the price action do all the talking. And right now, we don't know exactly where this market's going to go. We just know on the 1 hour chart, we're potentially seeing a trend shift. Also, don't forget that I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs. And I think with the current market conditions, now is the best time to be a BANC member. I'm also running a 50% off promotion code for your first month. So now is the best time to check out BANC Trade Alerts. You can find out all of the details and how to join by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.